Have you ever looked at your 401k or IRA statement and thought, I've got $1 million saved for retirement? Let me ask you a question. Do you really have $1 million? Most people immediately answer, of course I do. After all, you worked for it, you earned it, you sacrificed to save it, so naturally it feels like it's all yours. But today I want to challenge the way you think about your retirement savings, because there may be something you've not considered. If most of your retirement money is in a traditional 401k or traditional IRA, there's one very important detail many people overlook. Most of that money has never been taxed. Think about when you are actually working. One of the biggest benefits of funding a traditional 401k or traditional IRA was the tax deduction. Instead of paying taxes on that money while you were working, you are allowed to defer those taxes until later on. That's why these accounts are called tax-deferred retirement accounts. Notice the word deferred, not eliminated, deferred. At some point, generally, when you begin taking withdrawals, those dollars become taxable under the current law. I'd like to explain it this way. Imagine you own a business with a silent partner. Every year the business grows. It becomes more valuable. Everything looks great, but your partner also owns a percentage of that business. Eventually, when it's time to sell, your partner wants their share. Traditional retirement accounts work in a similar way. The government generally doesn't tax your retirement account while it's growing. Instead, it collects taxes when you begin taking the money out. That's why I sometimes say you actually have a silent partner. And that silent partner is the IRS. Now, before anyone misunderstands me, I'm not saying traditional 401ks or traditional IRAs are bad. It's far from it. They've helped millions of Americans save for retirement. For many people, that tax deduction during their working years was extremely valuable. The point isn't that these accounts are bad. The point is understanding how they actually work. Because retirement planning isn't just about building wealth. It's about understanding how much of that wealth you actually get to keep. Let me give you an example. Let's imagine we have two retirees. Both have retirement accounts worth $1 million. On paper, they look exactly the same. But one retiree has most of their savings in a Roth IRA. The other has most of their savings in a traditional 401k. Even though the balances are identical, their tax situations could be very different. The person with the traditional 401k would generally owe ordinary income taxes as they withdraw that money. The person with the Roth IRA may be able to take qualified withdrawals tax-free under the current law. That's a significant difference. The point is this: the number on your retirement statement doesn't always tell you the whole story. It's not just about how much you've accumulated, it's also about how much you'll actually get to keep. Now let's connect this to what we talked about in our last video. Remember the question I asked? Do you believe taxes will be higher in the future? Nobody knows for certain. But if you believe they might be, then another question naturally follows. Would you rather pay taxes at today's rates or whatever tax rates exist years from now? That's exactly why strategies like Roth conversions have become such an important part of retirement for most people. Not because they're right for everyone, not because everyone should do one, but because they are one of the tools that may help certain retirees better manage their taxes over time. The key is understanding your options before you make important retirement decisions. In our next episode, we're going to answer one of the biggest questions we hear every day. What exactly is a Roth conversion? We'll explain what it is, how it works, and why it has become one of the most talked about retirement planning strategies in today's world. If you found this video very helpful, I'd really appreciate it if you would take a second and like this video and subscribe to our channel. Every week, we're releasing another episode in our retirement tax series to help you better understand retirement planning and make more informed financial decisions. Thank you so much for watching, and I'll see you on the next video.